Email query next. Deepak has sent in a question. He says that he's taken a home loan of 3 crore rupees from Bajaj Finance at 10.57% 2 years back. Now, he's taken possession of the flat 3 months ago. With rate cuts happening, other banks are offering him 9.2%. Now, if he switches over his home loan to another bank, will he have to pay foreclosure charges? You know, this is something that I promised viewers we will be discussing. Switching a home loan. And you've been saying this through the show, Harsh, that this is a time if your bank is not offering you a good rate, go ahead, switch. Now, there's a substantial difference between what Deepak is paying and what he's being offered. What would you suggest?
And it's dropped below 9.2 also. I think the query might be a month old or so. Very clearly, there cannot be foreclosure charges if your current loan is a variable rate loan or a floating rate loan. It's not allowed. Neither RBI allows it, nor does the National Housing Bank allow it. So very clearly, there are no foreclosure charges at all. If you are a good client, good credit track record, even the new lender will give it to you. You can negotiate on the processing fees and all other upfront fees. Possibly the only charge you might have to pay are in states like Maharashtra, where this 0.2% charge is there on the stamp duty for creation of a mortgage.
And that is typically what banks call franking?
Franking is actually even smaller. Franking is actually on the agreement value. There is a franking charge. Yeah, so it can be 0.2% plus couple of thousand rupees on the agreement, on the home loan.
So that's a Deepak. If you are switching loans, and which you should seriously consider, considering that you're stuck at 10.57%, if I'm not mistaken, you should in fact take advantage of the falling rates and switch home loans, as in switch home loan providers, and you will not have to pay any foreclosure charges. Harsh, also, you know, for people who are existing borrowers who already have home loans, say there is someone who is in the earlier part of the home loan cycle, you know, 2 years, 3 years into the home loan, and is obviously locked in at a higher rate. Would you advise them to switch? And vis-a-vis someone, say, who's at the latter end of the home loan cycle, you know, where you have probably a year or year and a half left of repayment to be done, would you advise them to switch?
The switch, what is the cost of switching and what is the benefit? So, clearly, if the period left in the loan, which you can extend, right? I mean, when you go over to a new guy, you can always extend the tenure. But if the period left in the loan is not too much, then the benefit that you will get for the reduction is that much lower, right? But if the amount is big enough, even that benefit can be big. So I think the key issue is, what is the amount of your loan left to be paid? What is the period over which you are going to pay it, right? And what are the costs of switching and what is the benefit? I think if you take these 4 into account, typically if you are at least benefiting by 0.25% reduction in rates, in most cases, and we are talking home loans, in most cases switching a loan will make sense.
Right, good time to switch a loan there. A lot of banks are offering, banks and housing finance companies are offering very, very competitive rates in the market. So if you are locked in at a high rate, it doesn't harm. Go talk to your bank and tell them you're switching. Chances your bank itself will offer you a good rate. And if you do switch, then ensure that you do a cost-benefit analysis the way Harsh explained to you, and then go ahead and make that switch.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.